Welcome to this deep dive. Today our mission is to unpack a test log from 4 AI auto trading bots. This is from June 2nd.
Yeah, these are automated systems running on the MetaTrader 5 platform.
Right, MT5. And, well, here's the really fascinating part. Every single one of them lost money.
Every single one.
Yeah, like we're looking at a negative 1,429 yen realized loss and a negative 1,567 yen total equity impact.
Which just sounds terrible, right?
Exactly. But the source material actually calls this a highly valuable day. It kind of reminds me of, analyzing a race car's telemetry right after a crash.
That is a great way to put it, actually.
Right, because we aren't looking at who won the race because, well, nobody did. So I guess the core question here is, are we just figuring out which bot crashed in the most controlled way?
Honestly, yes. I mean, real progress happens when things break. We tend to view AI in trading as this magic bullet that just prints money.
Oh, absolutely. The whole set it and forget it myth.
Right. But understanding how an automated system behaves when it misjudges the market, that is literally the only way to trust its architecture long term.
Okay, so let's look at the telemetry of the bots that actually manage that damage well.
Well, what's fascinating here is a bot called LLMBridgeTrader.
Okay.
It traded the EURUSD pair, and it actually took the smallest hit of the group, so minus 185 yen.
Wow, that is pretty contained.
It is. Its AI reasoning actively contained the damage, instead of, blindly holding a losing position and just hoping for a reversal.
Which happens a lot.
Oh, all the time. But this one recognized a spike in volatility and dynamically cut the trade early. Yeah, for an AI, recognizing its initial judgment is wrong and executing a boundary is just a massive victory.
Right, but I mean, does that boundary always hold? Because let's look at GateGrid AI.
Yeah, the GBPUSD one.
Exactly. It finished down 206 yen. And it used grid logic, right? So essentially placing a net of buy and sell orders at regular intervals.
Yeah, that is the standard grid approach.
Right. And it actually secured small wins early in the day.
Yeah.
Like a plus 81 and a plus 19 yen.
Nice little gains, yeah.
Yeah. But then a single 306 yen loss just effortlessly wiped all of that out. So, I mean, doesn't that mean grid logic is inherently dangerous if one bad swing just erases all your accumulated gains?
Well, you are right. I mean, it is dangerous if you just leave it running blind. But that 306 yen loss isn't really a failure of the grid structure itself.
Wait, it isn't?
No, it is a failure of the bot's environmental awareness. It demonstrated resilience by extracting those small wins successfully when conditions were calm.
Oh, I see. So the strategy worked just at the wrong time.
Exactly. The takeaway is that we need better session or volatility filters. The system has to recognize when the market environment is shifting so it knows, when not to cast that net.
Okay, so GateGrid failed because it couldn't adapt to a shifting environment. But what happens when a bot does exactly what it's supposed to do, but the environment actually lies to it?
Yeah. That brings us to Bounce Sniper Bot.
Right, trading USDJPY.
Yeah, and it suffered a 438 yen loss. But what is crazy is one single trade accounted for minus 408 of that.
Ouch.
Right. But the bot itself executed perfectly. The issue was actually upstream.
Upstream how?
Well, it was fed a human-designed TradingView signal. So a third-party chart integration that tells the bot when to act.
Oh, so the bot followed those instructions flawlessly.
Exactly. The human logic is what failed.
Okay, let's unpack this. Because
Yep.
taking a flawless system and feeding it bad instructions, that leads us straight to the absolute worst performer of the day.
ML score GFT4 Jigu.
Yes. It traded GBPGPY and took a 600 yen realized loss. Plus, it was still dragging around a 138 yen floating loss at the end of the report.
Just an active bleeding wound on an open position.
Exactly. And it has this really tight reward target compared to a very wide stop range. It is basically like picking up pennies in front of a steamroller.
That is a perfect analogy.
Like setting up an incredibly complex, expensive mousetrap to catch a single crumb of cheese. But if it misfires, it burns your house down.
Right? One bad move, and you are completely flattened. Because if your potential reward is just a fraction of your accepted risk, you are mathematically forced to maintain an impossibly high win rate just to break even.
Which is basically impossible long term.
It is. And when you stack both realized and unrealized drawdowns on the exact same symbol like this bot did, the risk profile becomes incredibly unstable.
So if we connect this to the bigger picture for you listening, whether you are building trading algorithms or just designing everyday workflows, a controlled loss isn't a failure.
Not at all. It is a feature. It is the system successfully executing a boundary so you can reinforce it.
Exactly. We are looking at the crash data to build a safer, more resilient engine for tomorrow. But here's a final thought for you to ponder.
Let's hear it.
If AI bots perfectly and faithfully execute the rules we give them without question, will tomorrow's biggest technological crashes come entirely from our own flawed human logic?